Hi there, Dwayne Kavanagh here. I'm a licensed mortgage agent with TLC Mortgage Group, part of the Dominion Lending franchise. And today, what I wanted to do is just walk you through my mortgage toolbox. So this is a free app that you can download on the Apple Store or Google Play Store. It is a branded app, so you may not just find it if you're searching for it. You go to my website, you put in your cell phone number, and then it'll send you a link to my branded app. The app is actually the Canadian Mortgage app. It's just branded towards me and has access to all my lenders and that sort of thing. And I can walk you through the benefits of that. But you can download it directly from my website and enter in your cell phone number, and it'll send you a link. Many of my clients use it. A lot of my partners that I work with, realtors, financial advisors, accountants, they use it as well. And it's just a very helpful app. So let's just jump right in and talk about what you can do with the app. So the first thing you can do is you can start your mortgage application. Yep. So it's a very precise way of doing it. It's a convenient way of doing it. It's right there in the palm of your hand on your phone, and you can start an application. And it'll walk you through a series of questions right there on your phone. You can skip some of the questions if you don't have the answer, so no big deal there. But you can, start your application, send it through. And this application, it's not sent to a lender, it's sent to me. And then I can start to work on your file. And just remember, anytime you send me an application, there is no commitment to work with me. I don't sign any of my clients to any type of contract or anything like that. I'll let my service speak for itself. If after working together for a while you decide you want to go back to a bank, that's okay too. But let me be your resource. And so let's just jump into what also you can do with this app. And the other thing you can do is you can get pre-qualified. So there's a pre-qualification tool there. What this actually does, so this is not a pre-approval, so you'd never use the information here to go in and put an offer down on a house and remove conditional finance. This is just to give you a rough estimate of how much you can get approved for without ever having to talk to me or any mortgage agent or the bank agent. You just enter in some information about the property, what you're looking to, the mortgage that you're looking to get, and some information about you, and it'll pre-qualify you, okay? The other feature here is my mortgage calculator. This is a neat app. So if you already have a mortgage and you just want to look at, what would happen if I raise the interest rate or I change the term or the amortization, just a quick look at calculating your mortgage, you can use that app. It's just a really simple, easy to use app. But if you're like a lot of people today, you're trying to really understand what is going to be the impact tomorrow when I have to renew. There's a lot of people that signed up on 2% rates, 2.5% rates. And now we're seeing you're going to have to renew at a much higher rate. Like right now, there's 5-year fixed sitting at over 6%. So if you want to do an analysis to figure out how can I use this app to figure out what's that refinance going to look like if I took money out, what's the break even point, how long is it going to take me to pay it off, especially if you're going to be doing any type of, if you've got a lot of extra debt. So if you do have a lot of debt, high interest debt, things like, personal line of credits or credit cards, that sort of thing, then the refinance analyzer will actually do, we'll run through an analysis to take you through all that stuff. Okay, so that's the refinance analyzer. The next feature that I have is an actual purchase calculator. So if you just want to quickly look, instead of having to do a pre-qualification, you just want to have a look at, okay, how much can I afford, right? And enter in all that information. The purchase calculator will do that as well. We also have a debt service calculator, and you don't really need to get into that. If you're going to do a pre-qualification, it'll do that as well in the pre-qualification. But your debt service calculator, if you've never heard the terms before, when a lender is looking at your file, they're looking to see, hey, can this person afford this mortgage or this property? And the way they do that is they look at the GDS, which is your gross debt service ratio, and your TDS, which is your total debt service ratio. So your GDS is pretty straightforward. It takes your mortgage payment, which includes both principal and interest. It'll take any other household expenses like your heat, right? your property tax, as well if there's condo fees, it'll take up to 50%. We'll take 50% of your condo fees, add all of that together, and then divide that by your income. That ratio that we get is your GDS. And most lenders are looking for people to be under 39%. Okay. TDS, which is your total debt service ratio, the TDS adds in all your additional debt that if you canceled it tomorrow, you would still be obliged to pay. So a lease, a car payment, right? That sort of thing, your credit card debt, a personal line of credit or loan, student loan, that sort of thing would be part of the total debt service ratio. What wouldn't be is, say, insurance, subscriptions, stuff like that, right? So you can use that debt service calculator to see what your ratios would be. Also, if you wanted to just know what land transfer tax would cost, they actually have that built into the app as well. So if you're house shopping and you just want to see the difference, hey, what's it like to buy in Toronto versus Burlington? It'll show you the land transfer tax. And then if you wanted additional information like closing costs, you can do that as well. So in the app, it'll have a lot of the estimated closing costs based on the purchase price and where you're purchasing already built into the app as well. And then if you want to compare side by side, so let's say, for example, you want to compare, okay, what's it going to cost me over a 5-year term for a 5-year fixed mortgage, and how would that compare to a 5-year variable? Okay, so you can actually run those numbers and do that side by side, which is kind of cool. So that's just a quick overview of the mortgage application. What I'm going to do next is do a deep dive on each one of the tools, okay, each one of the features. So if you're going to use the pre-qualification tool, like I said, it's going to walk you through a series of questions that it's going to ask you. And just remember, you can spend as little or as much time on this as you want. And the first question it's going to ask you here is, where do you plan to buy? So here we can just come in, type in any city. So let me say Hamilton. I'll type in Hamilton. It'll automatically come up. And the next question it's going to ask is, are you buying a house or a condo? So let's say I know I'm going to be buying a house. I would just choose house, click next. And do you plan to rent out your new house? So here in this situation, if you do, because you're looking for income and you and your realtor are looking for an income property where you can rent out the basement, then you can actually choose that right now. And it'll add that rental income into your pre-qualification, right? Which is kind of cool. But I'm going to say no for now. And I'm going to hit next. The next is, how much is your down payment? You can just use the slider, or you can enter in the amount. If I use the slider, let's say it's 145, let's say, is what I have for a down payment. I hit next. Do you have any outstanding balances? Now here you would say yes. Most people have credit cards. You just enter in the balance. Let's say mine's 2,000. Do you have a line of credit? Let's say yes, I have a line of credit. Let's say it's 8,500. I say yes, hit next. Are there any other loans or leases? Well, I've got a car payment. My car payment is let's call it $500. I can put that in there. Any other loans? No. And I'm going to hit next. And then it's going to ask you some information about your employment. And it's important. Employment does make a difference when you're applying for a mortgage, but always reach out to us. We can walk you through it all. But if I say I'm employed, I'll just click that. Self-employed, if I'm business for self, I would pick that. If I'm retired and I have a pension income, I would click that. But I'm going to say I'm employed for now. Hit next. And then what is your gross annual income? This is the total annual income of everyone in the house. Let's say total annual income. I'm just going to pick a number out of the air. This is not my income, but let's just say our gross is 200,000 per year. This is before taxes and expenses, etc. Do you know your credit score is going to be the next one? Typically, you can find your credit score on things like Credit Karma. You can go, if I have RBC, so if you go on the RBC app, you can get your credit score through there. But let's say you say, yes, I do know it. Hit next. It's going to ask you what you think your credit score is. We're going to have to run a credit check anyways before we submit this to a lender or start underwriting your file. But yeah, you would choose here. Let's say I'm 680 to 799. And now I'm just going to hit calculate my home price. And well, what happened? Done. And now it'll show me exactly how much I'm pre-qualified for. So my maximum purchase price is $925,000. The total monthly cost, it's estimated to be $6,351 if I bought a property at that price. This breaks out expenses and mortgage payments. So if you click on any one of those details, like the mortgage payment, it gives you the actual details there. So it's telling you, we're using a qualifying rate of 7.29, an interest rate of 5.29. It's using a 5-year fixed with a 25-year amortization. Now, remember, if I've got, more than 20% down, the ratios we can work with, and then there are exceptions there, so we can afford more. We can also do a 30-year amortization. But anyways, this is, I'm just going to hit finished here. It just shows me my pre-qualification. I can download a certificate. Okay, so I hit done. It'll give me a certificate. It'll email me that certificate. Again, you're not going to use that for anything with your realtor or your when you're putting in an offer. This is just for you to see how much you had pre-qualified for. Okay, and it'll save this data now as I'm going through it. So the next tool I'm going to talk about is the mortgage calculator we talked about. So I'm going to click on the mortgage calculator, and you can see here, I can just add in any number. So let's say my mortgage amount is $500,000. And I just want to see, okay, what is my payments going to be? What's it going to go up to in today's new environment with the higher interest rates? So the good news here, and you may have heard this before, but absolutely we do. We have access as mortgage agents. We have access to a lot of different lenders, okay? And you can find most of them in this app with their updated interest rates, okay? So if I click the find rate right now, you can see I can choose any of the different lenders I want. I can select whether it's purchase, a refinance, let's call it a refinance. I can choose between fixed and variable. Let's choose fixed. It'll give me the lowest rates on a 5-year fixed right now. Then I can choose my term. If I want to switch it to a 3-year, it'll change it to a 3-year and then show me like my low rates on a 3-year or 5-year. So you have the options to just change all of that once they're in. So I'm going to pick, for example, let's pick this Scotiabank one here. So you can see now my mortgage payment is going to go to $3,081. So it's just a real quick way for you to analyze quickly how much your payments are going to go to and divide out your interest and your principal and that sort of thing. So that covers the mortgage calculator. Now I want to take you through into your refinance analyzer. So this is a little bit different. So let's say, for example, I'm going to go start new. Okay. Just like your pre-qualification, okay, it'll actually take you through a step-by-step, ask you a few questions, and then it'll add in based on what your goal is to refi, okay? So I'm going to get started, and it's going to ask you, what is your current property worth? Now, just remember, we're always going to need to get an appraisal done, okay? So this is just your guesstimate. What do you think it's worth? If you think it's worth 800,000, let's just say it's worth 800,000, put that in there. Okay. And then it's going to ask you, what is your current mortgage balance? Let's just say my current mortgage balance is 150,000. Okay. And I'm going to put that in there. It'll tell you my available equity is as well. While I'm doing that, it's going to ask you, what is your current mortgage rate? So let's say I'm going to use what's just on the screen. Let's just say my current mortgage rate is 310 on a 5-year fixed, and I'm coming up for renewal in October. Okay, so I'm going to hit next. You can enter in more information there, but it'll ask you who your lender is. So let's say, I'm with Scotia Bank. I can choose Scotia Bank. And then it's going to ask you how much is your current mortgage payment. And so you can put that in here. So here it's putting $764. You can put monthly. Let's just say, for example, I'm doing biweekly. I'm going to say it's $680, and I'm going to go accelerated biweekly and hit done. So then that tells me how much my mortgage payment is. When is your mortgage renewal? So it'll ask you to pick the date. So I'm going to choose, November 2023 and hit next. So now it's going to ask me to consolidate my debt. So here's when you think about why people refinance. People refinance because for a number of different reasons, right? They refinance for debt consolidation, right? They refinance to send kids to school and use some of the equity in their home. They refinance, take equity of their home to buy a property. Maybe that property is for the kids, right? So as an investment property, there's lots of reasons on why people will refinance. So here it wants you to add in and consolidate all your debt. So now I've added in a bunch of debts that are in there. And I'm gonna say, okay, I've got no more debts. Okay. And what is your approximate prepayment penalty? And in this case, I'm not going to pay a prepayment penalty because I'm coming up for renewal in November. So it's going to be 0. So I'm going to keep that at 0. It's asking you to put in a prepayment penalty, but in this case, we're not going to do it because we're just going to renew it. Okay. And then what will your new rate be? So this is where, you're going from 3.1% or wherever we were into where should you go now? Now we are in just my opinion, we're in a high position, a high interest rate position. So whenever you're at the peak, my suggestion is you want to look at maybe variable, because we know we can ride it down, get through 3 or 4 years. And once that interest rates come down to a more reasonable level, then maybe lock in at that point. So we're going to check what the lowest 5-year variable is. And there we have HSBC's got one at 6.3%. I'm going to hit next. And now it's asking, am I going to take out any extra cash? So at this point, I don't want to take out any extra cash. I just want to consolidate my debts. So I'm going to hit next. What is the most important? So here's typically, again, why people are looking to do a refinance. Some people will do it to lower their interest rate. Obviously not in today's environment. Some people may be looking to lower their payments. That's happening a lot today. And typically it's just going from a 25-year amortization to a 30-year amortization, so you can get lower monthly payments. Some people are looking to pay off their mortgage sooner. Now you would do that, if you got an inheritance or you came in some extra cash, whatever, but you're not going to refinance to pay your mortgage off sooner unless you can save. But the analyzer will show you how to do that if we can. And in some cases, we're going to do a takeout equity, and that is what we're doing. So we're going to take out equity to pay down our debts. Okay. So we're going to just create a scenario. You can just put in your name, and you can put in refinance. We can do that here, refinance, and hit done and hit finish. So now what it's going to do is it's going to show you, woohoo, your new payment is lower. All right, so that was the refinance analyzer. Now what I'd like to do is walk you through the purchase calculator. So this, hey, for my realtor partners out there or folks that are realtors that would love to learn more about how to do this, this is an amazing tool for you guys and gals to have in your back pocket. And here's why. And here's the thing is, if you're out with a client or you're doing an open house and you have someone that walks in and they haven't been pre-qualified before, they don't even know, like, hey, they're just walking off the street. Well, you can use this app and look like an absolute hero. Or as a client, you can use it to figure out how much can I purchase. So the purchase calculator is pretty straightforward. All you're going to do is click on the purchase calculator, and here you're just going to enter in the home price. So let's say the home price is $800,000. Okay. And I've got $145,000 as a down payment. I'm going to just enter that. All right, so that's 18%. So at this point right now, it can clearly show you that this is going to be an insured deal because I don't have 20%, right? So if you wanted to know how much 20% is of that, you can just put 20%, hit enter, and you can see it automatically increases your down payment to $160. And that's what you need to make this an uninsured deal. And an uninsured deal allows us to do a number of things. One is we can extend the amortization to 30 years. Also, it changes the ratios, your GDS and TDS ratios, which allows you to access more capital and purchase. Your buying power goes up, right? So again, in here, you can put in the mortgage amount. You can see that automatically calculated at $640. You can find your interest rates. And like I said, you have access to all the lenders that I have access to. So you can see that right within the app. You can change your amortization schedule and it'll automatically update. So let's say I've switched this from 30 years to 25 years. It'll automatically change the total monthly cost. You can come into the payment and you can change that from accelerated biweekly to just monthly. Hit done. It'll give you the monthly payment amount. You can add in your property taxes, condo fees, your heat, any other expenses. For example, if you're buying a property that has an income suite, so you're going to rent out the basement, you can put in the rental income for that. So this is all kind of a guesstimate. Let's say you're going to rent it out for $1,200, then you can see your monthly cost comes down, right, because of the rental income. So it's not a bad little tool to quickly just go through and see how much what your purchase amount could be. Anyway, so that's your purchase calculator. Next up, we have, I'm just going to go over the closing costs. And so if you go into the closing costs, again, you want to put in your home price. You can see it's $800,000 there. It's saying my land transfer tax is $12K, but we don't know what our land transfer tax is going to be until we put in where am I purchasing. So let's say I'm purchasing in Ontario, okay? Now, where in Ontario? If you're buying in Toronto, Toronto has an additional tax. So if you click the Toronto button there, you're going to see your land transfer tax goes up, okay? Because you're paying two taxes in Toronto. You can also, if you're a first-time home buyer, you can actually add what's the rebate. It'll add in the rebate there. There's a non-resident speculation tax. So if you're a non-resident, you can click that and it'll show you. Okay, so you know, some interesting features in there. It's at the palm of your hand. As a realtor, if you're out, you can have this with you. If the client walks in and they want to know, hey, how much how much are the taxes, the closing costs going to be estimated on this? It'll walk you through the estimated closing costs. If you want to run through a purchase calculator with them, you can do that as well. If you want to do a pre-qualification, you can do the full pre-qualification and literally have it done with them in like under 2 minutes. You could also share the app, right? So right then and there, you can see I can share the app. It'll automatically ask, well, where am I doing that? I can just send it via text message right then and there, and I can send it to the client. They would download it in a couple minutes and boom. Yeah, so that's my mortgage toolbox. I hope you found this video helpful. If you want to talk mortgage options, please reach out. You can DM me, you can email me, you can go to my website, fill out a form. You can download the mortgage app. You can communicate through me through there by filling in an application or setting up an account. And just remember one more thing with this app is a lot of people get concerned with the information that I see. I don't see what you're doing on the app. Like if you fill out the app, I'll get access to your contact information so I can reach out to you and you'll get an email from me. But other than that, I don't see what you're doing on the app unless you fill out an application. Okay. Well, that's it. Bye for now. Thanks for watching.